Hey there, welcome to the Guaranteed Retirement Guy Show. My name's John, and we're going to be talking about what happens to your annuity when you die. So when you purchase an annuity, sometimes it's for legacy, sometimes it's for income, but we always want to know what's going to happen to it if we pass away. Does the insurance company keep it? Do our heirs get it? How do they get it? Let's talk about it. So some annuity contracts will not give your money back. Okay, those are SPIAs or DIAs, typically with a no cash refund option. They typically will give you a little bit higher of a payout just as a reward for giving the insurance company total and full control of your money and never giving it back, even if you die a year into the contract. But that has its risks. Usually I tell people don't buy that, buy something that gives you a refund at least. With those contracts, you can select one that gives you a refund. The income's a little bit less, but that's okay. With an income rider, they will typically pay more than these other contracts, the SPIAs and the DIAs, and they will always give you whatever the account balance is in there. So, and some of them will give you, like the Allianz products, will give you, they'll either give you a lump sum, whatever the account balance is, or they'll give you a higher amount if your beneficiaries elect to take it over a 5-year period, spread it out. So that's kind of nice. There are options for that. But as far as losing your money, you're typically never going to lose your money if you die. And typically your beneficiaries will not have a surrender charge, especially if you got like a MYGA, which is like a fixed contract, like a CD. They're not going to experience a surrender charge. And it's same thing with the income rider. So they'll get whatever's in that account. Okay. So let me show my screen. I'm going to show you exactly what this looks like. So I threw someone in here from South Carolina. They're $600,000 and their plan was to take income at age 73. Okay. If they took income at 73, they're going to get $114,000 a year guaranteed for the rest of their life. Okay. This is a single payout. It's a little bit less if it's a joint. So if we go in here, we'll look at what the account balance will probably do. Okay. Probably is hypothetical. Okay. So you can see here, they're giving you some of the S&P 500 and this account balance will probably go to 885 grand, probably. Okay. But the benefit base, this is contractual. This is guaranteed. And this is what's used to have lifetime income. And they're growing this at 8% a year. And so 1.5 times 7.6% withdrawal rate, which this is contractual. This will be in your contract. It'll pay this amount, $114,000 for the rest of your life. So this particular person, they might be thinking, well, I'm just going to wait till I'm 73. I'm going to use this for RMDs, for lifetime income, because this is an IRA. So that's a great strategy. But you'll notice, what if something happens to them during this time? Okay. See the death benefit here? It's whatever the account balance is. Okay. So you're not going to be dinged if you die, or your beneficiaries are going to get all your money. Okay. So that's what's there. Now, the cash surrender value though is less. This is if you cancel it. You notice it's a little bit less than what's over here. And that's just because if you cancel it, it's a long-term contract. If you cancel it, they're going to charge you surrender charges. So, but if you die, your beneficiaries are not going to get dinged for that. Okay. They're going to get your money. So now let's go down here and we'll say, well, what if I start taking income? Okay. What if I start taking income till like 78, 79? Well, my account balance is still 408. I've taken several $100,000 in income. Is there still a death benefit? Look there, right there, 408. Okay. Yeah. Same, whatever is in there, they're going to get. But look at this. The death benefit is usually gone at some point because the money just runs out. I mean, your income is guaranteed for life. So don't get me wrong. You paid 600 grand for a roughly $2.6 million pension, which is pretty good. This is, if you live till 95, you live longer, you get more. So that's great. But the death benefit does not last forever. Okay. Now, if you're married and you're wondering what happens to my annuity when I die, then I'll show you here. If you're joint payout, which I always recommend, the income's less. Okay. Yeah. It's $7,000 less, but it's joint. Okay. What happens then? Well, and this is again, same company, Clear Spring. They're giving you, what they're doing is they're giving you a joint payout and a single payout. So you see the single payout right up here. It's the same 1.5 million times 7.6. That's what gives you this. Okay. For the joint payout, it's the same thing, 1.5 million, but now it's 7.1 because now they're on the hook for 2 lives instead of 1. Okay. And this all can be different. Just depends on your situation and how old you are or how old your spouse is. But the difference on this is the income here is guaranteed, just like usual. You can see here's what happens if there's no index growth. Your account balance, and therefore your death benefit, lasts only a few years after starting income. If you experience growth, it lasts a few more years. Either way, if both you and your spouse die, then your beneficiaries will still get whatever's left in that death benefit. If you die, your spouse will continue to receive this income. I mean, they can elect to take the account value if they want as a lump sum. They certainly are free to do that, but they probably won't because they're like, I can't generate $107,000 in guaranteed income from 451. So yeah, it's probably not something you want to do. And so what they'll do is they'll just continue to take the income. And so that income will continue for the rest of their lives as well. And so the death benefit will be there as long as the account balance is there. It's that simple. So yeah, annuity companies are not here to take your money. Most of the time, people buy the options that will give them a refund of their account balance when they die, say, or if they do a joint payout, that it will continue that income for life and then refund whatever's left if both of the annuitants die before the account balance is used up. So if you are looking to purchase an annuity and you want to see everything that's available and you want to work with someone who's transparent, who's showing you everything that's available, regardless of what their commissions are, then I would invite you to book a call with me. There is a link below this video. It goes directly to my calendar. We'll get on a Zoom call and I'll show you everything that's available. Okay. Or you can go to my website, check out the annuities for yourself. And then after you see the payouts and if you determine that's something that you like, then book a call with me there. There is a link there on my website as well. So I'm happy to help. I don't want to push you into anything, but I do want to help you. If you are looking to purchase, I'd love to help you do that. So if you have questions, make sure you comment below. Happy to answer those as well. If you like the video, make sure you like it, subscribe, share. And yeah, I'd love to help you if that is something that you feel would fit your portfolio. So thanks again for watching, and we'll see you next time.